All right. Are we finally getting the pullback that I've been calling for with crypto? Inflation numbers come in a little higher than expected. So we're getting that pullback. What does it really mean? It's tax season. What does that mean? We're going to get into that. We've got an expert here to help us talk all things crypto accounting and taxes. And of course, we've got our latest news, all things SEC, all things uh, contagion. We're going to give you all the highlights, all this and more. We'll get to some Q&A. It's time for Money Talks, folks. All right, welcome to Money Talks. I'm your host, Bill Barheit, founder and CEO at Abra. We've got a bunch of things to talk about today and not a lot of time to do it, so I'm going to get right to business. So we had a little bit of a surprise on the CPI print this morning. Some comments from the Fed led to a sharp downturn in stocks this morning. The Dow fell about 400 points, and of course that led to a sharp downturn in crypto assets. I'm going to show you the SPX right away here. I want to get into this. I don't normally do, as you know, I don't spend a lot of time on technical analysis, but this is important. So this is the S&P 500 that I showed you a few weeks ago. Just as we broke this trend line, and you can see that we've been above this trend line since we broke it on a daily close in basically in late January. Now, my expectation would be we would kiss off this trend line in the next 2 or 3 days, and given the weekend, that would probably be Tuesday or Wednesday next week, and that could be, let's say, March 1st or March 2nd, and scream higher. The dollar is also moving up. This you could consider this just basically inflation fears leading to more Fed tightening. I personally think it's a bounce, and people are reading too much into these CPI numbers because there's a lot of trailing indicators that haven't been factored in here, particularly housing. Is the big one. All right, and so my take is that we're going to see a weaker dollar. We're going to see a stronger S&P 500, as I shown here, and also if I go back, this is Bitcoin, but I'm going to show you. Actually, let's stick with this chart for now. So as I was hoping a couple of weeks ago, we might get a pullback to the 21,000 or maybe even 20,500 range, but instead we had a higher low in the 21,700 range. Now, because we had that higher low, ideally we wouldn't go below that higher low. So next week, if the S&P pulls back, now we don't want to get a low much more below 22,000. If we do, then we have some concerns on the Bitcoin fronts. But I suspect that won't happen. I would not be surprised to see Bitcoin pull back to 22,000, maybe 21.9, something like that, and then continue its march up here to the right, from that higher low. If we get a lower low, then all bets are off. But I don't expect that to happen, given everything I'm seeing. I think this is basically the gyrations of moving towards a recession, and people are overreacting to small noise in the numbers on the way there. That's my take. So okay. All right, and then of course, quick read on Ethereum. I'll come back to this after we get into our guest, but let's see here. So we've got 1592 on Ethereum, which again, reasonable pullback. We would like to see Ethereum. We would have liked to have seen Ethereum maybe back to 1450 last week, but we didn't get that. We got a much higher low of 1500-ish. So now we don't want to see a pullback below 1500 for sure, preferably 1525, which is what I expect we'll get. Okay. All right. So I'm going to stop that for now, and I'm going to talk to you about some crypto accounting. We've got a guest with us today, the CEO, I think founder and CEO of Bitwave, who's going to be joining us now, Pat White. So we'll bring Pat on now. So as you all know, and those of you in the U.S., it is tax season. It's winter season in California. We're getting some snow, believe it or not, in the Bay Area. But but it's also tax season. So to help us figure out all this out and make sense of what's going on, we invited a friend of the Abra family from Bitwave. Pat, welcome to Money Talks.
Bill, it is absolutely spectacular to be on. Thank you so much for having me. Great technical analysis there. I was enjoying that. I have like a bunch of follow-up questions, but we'll have to do it later.
All right, sounds good.
That's great.
Sounds good. So yeah, we get basically a mix of all kinds of things on Money Talks, from a little bit of tech analysis, a little bit of news, a little bit of alternative investments, what's latest on the techie side, and we try to mix it up a little bit. So today, of course, we're going to get into what's going on for tax season. So let's start out with what you guys do. So tell us a little bit about Bitwave, how you guys help companies and your clients navigate the complexities of crypto.
Yeah, of course. So Bitwave is we call it the world's first enterprise digital asset finance platform, but we are a business-centric accounting and tax platform for companies that use crypto as part of their actual business. So, I'm sure everyone's familiar with, Coin Tracker and those types of tools for doing your personal taxes.
Yep.
And that's great. We don't really compete with them. It's a totally different business. We focus on if you are a business, whether that be, investment companies or OpenSea, companies that are marketplaces, NFT creators, you name it, anyone transacting crypto, those are our customers. And they tend to have a very special set of needs because, individuals don't really care about their accounting per se. They care about their taxes, like obviously, but they don't care what they're spending their money on beyond just sort of a high level, here's my kind of budget. But businesses, you have to be very, very you have to say exactly what you're spending your money on, how much you're spending, what you're paying in, gas fees and all that kind of stuff. So we have a full product that basically on the one side are wallets, blockchains, custodial accounts, exchanges. On the other side is your internal ERP system, so QuickBooks, NetSuite, whatever it is. And we help bridge the gap between those two for all things digital asset and accounting.
What is the typical use case? I mean, who is your typical client? What do they come to you, they say, here's my problem, I can't figure it out, help me with this?
There's no typical client. There really isn't. It's so interesting. You have OpenSea as a client. They're doing 50 million transactions a year of small. Because every time there's a trade on OpenSea, their smart contract routes one of their wallets a small amount of the token that was used to trade.
Yeah.
And I say that way because it's like it's such an interesting use case because it's super high volume. I mean, if you think about traditional companies, it probably took Walmart 30 years to be getting up to 2-3 million transactions a year. OpenSea did it in like less than 18 months. And the hard part about that, it's not that these are intractable problems, it's that you don't really have the chance to grow your internal teams along with it. Walmart had 30 years to grow up to be a 1,000-person finance team. OpenSea is still like 5 or 6 people on their finance team. So there's this enormous transaction volume, but they have to do it light because we're all startups here. You have to be light and agile.
Yeah, and so I have this theory, right? We're going to get the next run up in crypto. A lot of it based upon just the kind of macro gyrations of the economy combined with where we are in the crypto adoption cycle. And I think that as we get the next run up, one of the big questions is going to be, again, corporate treasury adoption of Bitcoin, and probably this time a lot more on Ethereum as well. And this tax treatment question keeps coming up. And I know that there was back in October some potential changes announced to tax treatment. And I'm wondering if you could explain in simple terms to folks like what that means, what that means for your corporate clients, or what it will mean, what it could mean, and what it might mean for the rest of us once these changes are formalized.
Yeah, it's such a good question. So what you're referring to is the FASB. It's a FASB discussion that's coming out. So you got to go back in time a little bit. 2014, a little bit better. The big four all got together and said they looked at crypto and they needed to make a judgment on how it would be handled for accounting purposes, because it's a totally novel instrument. The government and industry groups take a long time to respond. But as of 2014, people had to start filing their taxes. They had to start filing doing their accounting. And so they made this decision back then to do digital assets as what's called an intangible asset. The only intangible asset out there that most people will be familiar with, the way you treat it for your accounting purposes, is your domain name. So generally what you do with a domain name is you buy it, you keep it on your books at the value you bought it at. But if something really bad happens, you might have to mark it down. So a great example would be FTX. Like FTX had a 3-letter domain name that was probably worth a lot of money, but then FTX happened and now it's not worth any money at all. And so you go through this process called impairment where you mark things down, but you never mark them back up. And so that's the treatment we were using for digital assets for accounting. It was kind of a nightmare, which is that you have Bitcoin over the course of a year. If it ever goes below the price that you bought it at, you had to create a loss on your books, and you never got to mark it back up until you sold it, and then you took the gain off of it. So that was the intangible asset treatment. It's very difficult to do. It's very complex. It's not even that clear how you do it for a high liquid asset because it's meant to be used on low liquidity assets, but neither here nor there. So the FASB decision came out is they finally are looking at doing more of a fair value treatment, which would be more akin to what traders would do if you run a trading shop. So essentially on a daily, weekly, monthly basis, you'll take your Bitcoin, you'll look at the last price you marked it to. If the price has gone up, you take a little gain. If it's gone down, you take a little loss, and you're basically keeping it more in line with it. There's still a lot of ambiguity. It's not clear if that's going to cover all assets, if it's only going to cover ETH and Bitcoin. There's a lot of things that are carved out, like NFTs are explicitly carved out. It seems like governance tokens are carved out. So there's still going to be a lot of complexity in this whole impairment world, this whole digital asset accounting world. But it leads really well to what you were saying, which is talking about overall enterprise adoption. Because I like to talk about this idea of like, I imagine a CFO at GE, and I don't know why I always pick on GE. It's nothing personal. Maybe it's because I love 30 Rock, so I just always think about Jack Donaghy or something. So you have the CFO at GE, and you're saying like GE is a perfect candidate to adopt crypto. I mean, they really are. So whether it's on their finance team doing financing or, payments or, taking their solar farms and finding new ways to monetize it, building miners into it, really, really great candidate for it. There were 3 really bad things there's 3 really big headwinds that CFO had to get through. So first and foremost, you have kind of ESG concerns from the board over carbon footprint of Bitcoin, Ethereum, whatever it is. So we had the merge last year, which really changed the entire nature of ESG concerns for crypto, for Ethereum in particular. So that's kind of like tick a check marks there. Now the CFO can get over that. The second of all is impairment, because you are basically telling the CFO like, hey, we're going to buy this coin at this price, and sometime in the future, you might randomly have to take a $250 million loss on your balance sheet, like on your P&L. And like, if you're the CFO of GE, you're like, no, thank you. I would rather not do that. Like you can't do anything about it. It's completely out of your control. You can't even really hedge against it. And so that ends up being this like really nasty, anti-adoption piece there. So with those rules changing, I do think we're going to start to see more pickup of the actual like use cases within enterprises. Because the third pillar, of course, is that your business is asking for it. Like there's so many reasons GE would want this. They're asking their CFO for it, but he just couldn't do it because these other 2 reasons.
Got it. First of all, what is the timing of all of this? When might this change become permanent?
It might become, so what'll happen is they'll release a draft over the next month or so. Or they've released partial drafts, they'll release a bigger one. They're going through a comment period right now. 3 months from now, 6 months from now, they'll do an official vote on it, and that will be when it becomes permanent. There's then like a transition period because you've been doing accounting this way, so you have to figure out how you change it. So it ends up you end up with this really weird situation. Is if you do have really large impairment expenses, like Tesla and MicroStrategy publicly have $100 million impairment expenses, they'll end up with the reverse of that. Is they might have a windfall that they can take because suddenly you can mark those assets back up. So it's all financial chicanery, so it's not exactly like that important, but so there'll be over the next year or so, we'll start to see this get rolled out at businesses.
Okay. So few months of comments, process, procedure, and then maybe if we're all lucky and the stars align later this year, we'll be in a position where companies aren't basically penalized for holding crypto on their balance sheets like they are today. So that's extremely encouraging. What are the most important things that, let's say, small businesses or people need to understand? Independent, we get the impairment charge issue, but typically when you're thinking about crypto and taxes, are there unique things besides the impairment that creates this complexity, or that companies or individuals, for that matter, really need to be aware of?
Yeah, so there's a couple things that I'll mention here, and like often when I'm talking to people, I like to phrase things in terms of like how to make your accountant not hate you if you use cryptocurrency. which is, I mean, and it's kind of a hard question because your accountant's going to kind of hate you if you're using cryptocurrencies. That's how to make them hate you less. The first and foremost is, this might sound almost unbelievable, but for most of our clients that come to us, Bitwave will be the first place, because you add wallets to Bitwave, you add exchange accounts. Like imagine like Mint or any of these tools out there. Bitwave will be the first time that they've ever gathered all their wallets in one place. And I kid you not, we have multiple clients that have found 1 or 2 years after they got spun up with Bitwave, did their taxes, filed financial reports, found wallets with $5 million in it from 2 years before. I mean, it happens all the time. So there's this part of it is like, one of the things I often tell people is like, as you're getting into crypto, there's a tendency to be very pell-mell about it. You just, wallets and this, and you're opening this, and you got an app here and stuff like that. Like, try to be if you are a business doing this, be very conscientious from day one. Keep a global spreadsheet that is your absolute like source of truth about your digital asset, wallets, exchanges, all that kind of stuff. Be really good about downloading reports. So if, let's say you get an FTX account as a business, go in every month and download your trading history. It is like, no joking, FTX. I was on vacation in Hawaii. The FTX stuff happened, and then about 4 days later, like it was like a Saturday afternoon, and suddenly our dashboard started lighting up with errors because they just turned off all their APIs. And so anyone that had been using FTX, if they hadn't already connected Bitwave, or if they hadn't downloaded their data, there's something completely SOL because like Sam Bankman-Fried just turned it all off. We're done here. So it's one of those things. Crazy. Be very conscious. Pull your data together. Keep good records. Download it. Take notes. Like if I send you one ETH like 6 months ago, I don't always remember that. So take notes on what you're doing, or use tools like Bitwave to be able to handle it.
Yeah, and for you, I'm curious. Like, what do you personally do? So let's put the company stuff aside for a second. So you got to file taxes. We're Americans. Yep. I got to file taxes. So I'm guessing you do some stuff in crypto since you're working crypto. Yep. How do you deal with crypto and taxes for yourself?
I get to cheat because I do use Bitwave to do my taxes, but that's just because I built it. So it works well for me, but it's not necessarily designed for like people that don't have a good accounting background, because you are having to categorize things and stuff like that. But what I'll tend to do is I work with accountants and tax people that are not necessarily crypto experts, because I have my person's been doing my taxes for the last 20 years. And so I'll usually prepare everything for them and then hand them over one of our reports that they can take and actually file as part of it. There's different levels of sophistication, because I think a lot of our clients do just want to give a person access to Bitwave and say, hey, you do all of my crypto tax and accounting. And it's really not there yet for crypto in general. Like, for anyone that's used one of the tools, it's still really hard. There's still a lot of stuff. Like, you see people buying some of these random coins, like accountants just like look at this, like, what is this? Why are you buying this coin? Why do I have to report this to the IRS? So,
Right. Now, you guys are obviously a very U.S.-centric company, I assume, but at the same time, a lot of your clients must be multinational companies, right? So how do you deal with that, or is that not something that you try to address today?
There's a couple of nice parts about it. So first of all, we're actually a fully remote company, and we are in, at this point, 17 countries, I think, something like that. I mean, it's kind of incredible. Like, it's this really weird side effect. Maybe you and I could talk about if anyone's, but like we grew a lot during the pandemic, and it always felt very weird to me to be like, hey, I'm not going to see you for 2 years, but you must be in this 30 square mile area. So we just sort of naturally became a remote only company, and I love it. Like, I would never go back to be in an office. But the principles around this is pretty much universal. Like, whether you are buying and selling coal in Algeria or crypto in Singapore, the idea is like, you buy it at a particular price, you sell it at a price. The delta behind there is some sort of gain loss. There's different percentages the government's going to take, but we don't actually tell you what percent that is. We tell you, here's your gain loss, and then you give it to your accountant, and they run a really simple calc to get the percentage, and then go from there. So it's actually, the rules are relatively universal actually at this point.
Yep. Okay. So what else, I mean, just to kind of sum up here, like, what else should people think about, know, when it comes to crypto and accounting? I mean, you covered a lot very quickly. Is there anything else that you want people to know? And, I'd like to maybe end with some thoughts on where we should send people, but anything that you would have hoped that we would ask about crypto and accounting and crypto and taxes?
Yeah. Well, I'll talk about two parts. I mean, the high level for this is be proactive about getting into this. Like, I think as Americans, I think we take special pride. Maybe not all of us, but some of us take special pride in doing our taxes April 14th, and that's real tough to do in crypto. So like be more proactive about your crypto taxes than your normal taxes on that side. Find tools like Bitwave, because again, the sooner you get your exchange keys added, the sooner you don't have to worry about FTX going out of business, because you have all that data stored somewhere from that side.
Yeah.
So that's the piece that I would say to ask on that side. The other side of like questions I would love to answer is, for what we see happening this year, kind of getting back to this idea of enterprise adoption, we actually see that this is going to be a really big year for payments, to be honest, because this is, you were talking about us heading towards a recession, and we all kind of feel this, like there's this general, trepidity in the entire markets, and everyone's just sort of tiptoeing around. Part of the belt tightening there is going to be finding marginal efficiencies. Crypto is a great place to start getting marginal efficiencies. So if you need to overnight a check across the country, it still costs you $35. And that's, if you can do that on Polygon for 7 cents, I mean, that's a big deal.
Right.
So we launched, one of the products that we launched is called Bitwave Ops, which is focused entirely on this ops use case, which is paying bills, paying vendors, paying employees, getting paid in invoices, all based on smart contract with like a tight integration back to the accounting. So imagine Expensify, where instead of like I swipe my card, then I tell you this is a travel meal. It's that I tell you a travel meal, and then I click the send button, and so you close the loop that way. So we're really, really excited about payments this year. We think it's going to be a huge. We think this could be the year of payments, because there's just really good marginal efficiencies to start getting to eking that extra margin out of your business.
Yep, awesome. So Pat, where can people find out more about either Bitwave or you, or follow you and or the company online? Where can we go?
Absolutely. So we are at bitwave.io. And then on Twitter, we are bitwave_platform. I'm at Pat White on Twitter, though. Twitter's a little weird these days. I'm still trying to sort my way through with the new Twitter that's out there. It's a little different now, because I keep seeing Elon Musk tweets that I don't follow him, so I don't know what to do about that.
Yeah,
but
it's a shit show.
It is. Yeah. It is a shit show. I don't know how else to describe it. But Bitwave.io is the best place to find us, and we'd love to hear from you. If you need any help with tax accounting for your business, we got you.
Gotcha. We'll put the link in the show notes as well. And Pat White, thank you so much for joining us here on Money Talks, getting some positive comments and feedback, and we really do appreciate your time. And I know it's a busy tax season on tap here for you guys, so thank you so much for giving us the time.
My absolute pleasure, Bill. Thank you so much. Thanks so much, everybody. Have a wonderful day.
All right, take care, man. All right, so thanks, Pat. Let's get into some right away to some news. There's so much going on in crypto land right now. As I mentioned, we had a little bit of a pullback today. 3% on Bitcoin, Ethereum. To me, it's noise right now. We're clearly in a kind of micro bull trend, still kind of macro neutral, coming off the lows from last year. So not going to spend too much more time on that, although I'm happy to get into any other questions. As I said, the Dow fell over 300 points as there was an inflation report that was probably a little hotter than expected. Although, as I said, I think that we are in a very clear trend towards or march, I should say, not trend, march towards recession. I think that there are some trailing indicators that have not kicked in yet. In particular, I would say housing is the biggest one, but there are others, and we'll talk about those in due course as well. But as I said, I do think that we are in a clear trend towards. Excuse me, can't speak today, which is not good for a podcast. We're in a clear trend towards recession. I think the numbers are supporting this. I think that, so we'll get into this a little bit more, but let's see, what else do we have in the news? We had some big SEC moves this week. So we're still reeling a little bit from the takedown of BUSD by Paxos. There was a price plunge a couple of days ago. It fell intraday to about 20 cents. Now, this is something that shouldn't happen with an asset-backed stablecoin, meaning if the stablecoin is dollars and it has dollars and dollar equivalents in a bank account, it shouldn't depeg, but it does trade openly on an exchange, just like Bitcoin versus Ethereum or Bitcoin versus dollars. So the price does float. It just usually floats within fractions of a penny, meaning $1 might be 1.001 BUSD or vice versa. And so the spreads tend to be very, very tiny. But it did depeg for at least a few minutes, and I have a feeling it was because of this kind of, let's call it, quasi run on BUSD that was caused by the news coming out of the SEC. Paxos has very clearly said that they do not agree with the Wells notice, and if they are sued, they will fight. In the meantime, they have stopped issuing the BUSD, and they claim it's not because of any action on any regulator's behalf, neither the state of New York nor the SEC, that it's other factors, but they have not disclosed what those factors are. Personally, I hope this thing gets back in business. I think we need competition for stablecoins. I love Circle. I think they're a great company, but I would like multiple issuers of stablecoins for the good of the overall health of the crypto industry and markets. So we'll follow that closely and see what happens. Coinbase, very interesting announcement from our friends there. They launched a layer 2 blockchain called Base yesterday, which is going to be the foundational layer for pretty much their entire platform in the coming years. It's in testnet now. It's built on Optimism's OP stack, and they're planning, according to them, if I understand it correctly, moving their 100 million users, 100 million plus users, and 80 billion in assets onto this platform in the coming months and years. And they are encouraging their developers to start looking at Base. Look, I think this is fantastic. I think it's, and by the way, there's no new token, which means it's going to use Ethereum and the normal ETH gas model to power this thing, and that's super bullish for Ethereum, certainly at scale. And so we'll follow this closely. We've got some big things coming up for our plans around Web3, and we're going to be. I'm going to hold off on that. I definitely am not going to pre-announce that, but I'm going to be super excited to see where where this new Coinbase Layer 2 product fits in our own plans, which we'll talk more about in the coming weeks. I'm really excited about the future here for us and Web3. So congrats to Coinbase on that announcement. It's nice to see some innovation and exciting stuff happening during the downturn. And another interesting Web3 announcement. A friend of mine, I think many of you know, I used to run a gaming company called Sonari, kind of feature phone games pre-iPhone. And we worked with a company called Digital Chocolate. Digital Chocolate was a mobile phone gaming company started by Trip Hawkins. Many of you know who Trip Hawkins is because he was the founder of the huge giant in the gaming space, Electronic Arts, of course. And he has joined a Web3 gaming company as chief strategy officer and taken a board seat. And so Trip and I go way back, and we've got a lot of common friends in the gaming world. I'm super excited to see what they do in the space, and congrats on the move. I think it's great. I think it's going to be a great move for the space in general to bring some attention, bring some new, some old blood, with the new blood, and mix it all up. And excited to see where that's going. So congrats, Trip Hawkins, and and the team. Yeah. Anyway, Games for a Living is the name of the company. I think they're based in Spain, if I recall, in Barcelona. So congrats to them. Let's see. We've got some other stuff I wanted to mention. The ECB, the European Central Bank, is moving full steam ahead with their digital euro project. I did a podcast with a friend of mine, Mark. I just did a brain freeze. I'm really getting old. I can't even remember things that I did 15 minutes ago. Never mind 2 days ago. Anyway, Mark Jeffrey. Sorry, Mark. I'll actually give you a shout out here and bring up the Twitter link. So if you go to Mark Jeffrey on on Twitter, you can see a video that Mark and I did, and one of the topics we got into, which I thought he did a really good job on, was the central bank digital currency model. And you can see here, we talked about the SEC's actions in crypto enforcement. We talked about central bank digital currencies about 2 or 3 minutes, or actually, I'm sorry, 20 or 30 minutes in, and you can listen, and there's snippets of the talk here online. But my quick take, stop this. My quick take on the central bank digital currency model is that it is a huge potential nanny state, surveillance state hole waiting to be opened. And if we don't insist that this hole not be opened, I do think that the powers that be will push until they get what they want, which is basically a central bank digital currency based surveillance state. Now, a congressman, and I tweeted this, so I'll bring it up in a second here. Tom Emmer. Tom is the House Majority Whip, which is a big deal. If you ever watched the House of Cards, you know what the whip does. And he introduced, and I'll bring up the tweet here to give him a shout out because this is a big deal. He introduced a central bank digital currency legislation, and it is the Anti-Surveillance State Act. And as you can see in the tweet, the goal is to halt efforts of unelected bureaucrats in Washington, D.C. from stripping Americans of their right to financial privacy. I think that's pretty well said. And hopefully, I wouldn't mind. While you know me, I'm anti unnecessary legislation, but I wouldn't mind a bill which would prevent the government from creating a new type of surveillance state based upon a central bank digital currency. I do think that there is a place for a central bank digital currency if we can address these issues, meaning no surveillance, peer-to-peer, functions like a true bearer instrument, just like a dollar today, meaning if I hand you a dollar bill, there might be fingerprints on it, but as long as you're holding it, nobody knows where it came from, and that's very reasonable. And I would hope that the same thing would happen with a true digital dollar, okay? So kudos to Congressman Emmer for his efforts there. Let's see, what else are we seeing in the news today? Lots of stuff going on. I don't want to make it all negative, but there is a lot of interesting news. Some of it's negative, some of it's positive. Actually, we talked about the base. We talked about Congressman Emmer. So we talked about the SDC, of course. Circle, I mentioned Paxos. We'll talk about our friends at Circle. We're big supporters of USDC. Looks like Circle is aiming to go public and is doing a tremendous amount of hiring. This is good to hear. As I said, we're big supporters of USDC. It's by far the most used stablecoin in the Abra system. The cool thing about Circle and the USDC, it's supported on multiple blockchains now, multiple exchanges, and they just keep going. And it's very impressive. And they seem to be generating a lot of cash based upon the interest that they're able to generate by holding cash in the bank accounts. I think they use Bank of New York. I may have that wrong, but I think they basically custody funds from Bank of New York. I don't know. I found an article about their plans to go public. I don't know if it mentions that, but it's pretty well run company from what I can tell. Well regulated. State of New York oversees it. Multiple jurisdictions where they have money transmitter licenses, et cetera, et cetera. Good bank partners. So we need this company to be American-based or U.S.-based to succeed, to eventually be public, full disclosures that go along with being public, et cetera, et cetera. So kudos to them. I hope the progress continues. I'll have to give a shout out to the Abra team. Lots of progress happening, lots of great things happening at Abra right now. So really grateful for the efforts. Look, I'd be lying if I said it wasn't a stressful few months for everyone working in the crypto space, but the Abra team has done an amazing job of weathering the storm, and we all owe them a vote of gratitude and confidence for their efforts. Whether you're an institution, private clients, individuals using us via the app, we love all of you, and we've gone to great lengths to give you the best possible service model that we can. We have a lot of exciting plans for this year. We've been launching new coins. We launched Solana a couple of weeks ago. We launched Shiba Inu, I think yesterday, as a matter of fact. So if you go into the Abra app, I'm just looking at my app right now, and you start up Abra, and I'm going to click on Add Token. Let's see, Add Assets, and I scroll down. Let me just see if it's here. Shib, there it is, Shiba Inu. So I just added Shiba to my list of assets, and you can trade, buy Shiba Inu. You can withdraw it, I believe. We don't support deposits quite yet. Hopefully we will in the future, but like I said, we're going to be adding more and more assets as we go. And this is part of our new trading app. I do think we're going to be releasing limit orders sometime soon. We had a bunch of delays because of all the market insanity last year, but I think we're getting back on track from those delays now. So kudos to the Abra team. We're really appreciative of your efforts. But you can go to abra.com and you can get all kinds of information on the services we offer for individuals. You click here for private clients, for institutions, fully open for business. And I'm getting questions all the time. Or comments. It's so amazing that Abra survived. You guys are doing great. We really appreciate you still being here. And yeah, it's definitely been a tough few months to watch the events unfold and what's been going on with our competitors, many of whom are no longer with us, and hopefully their clients will be able to get their assets out of those situations that they're in sometime soon. I know we've been in the press a little bit lately for what's been going on with Celsius and the potential acquisition of Celsius assets, including the lending book. I can't comment too much about it except to say we would love to help. I have a lot of concerns about the current proposals on the table and the ability of those companies to service those proposals. But we want what's best for Celsius borrowers and earn holders. I've spent a little less time on what's going on with BlockFi, although I did read, I think it was yesterday I read, or maybe it was even super early this morning. I was up very early. That they're basically having a big fight now with certain creditors, which is limiting their ability to move forward on any kind of deal because the creditors think they're getting screwed, basically. And BlockFi, of course, doesn't agree. It's just degrees of getting screwed at this point, honestly. So I hope they work it out. We're not involved in that one, but I think they owe something like $10 billion to over 100,000 customers. And I think their top 3 or 4 creditors alone are owed over $1 billion. So it's a tough situation. I hope they work it out. I know this bankruptcy judge, Kaplan, is pretty well known for knowing what he's doing, and hopefully it'll work out. So we'll have more to say about that if we hear anything else. Voyager was also in the news. The SEC objected to Binance taking over Voyager for $1 billion. I guess it has to do with, excuse me. I guess it has to do with their VGX token. And they said that it may be unlawful and discriminatory as they examine the VGX token. Now, here's the thing I don't understand. This VGX token has been around for years, all right? They had every opportunity to step in and do something about this thing, and they didn't. But now that people are getting tax bills and can't get their money out to pay their taxes because Voyager's bankrupt, I'm not kidding, this is really happening. I saw a friend posted this online this morning on Twitter that basically he's got a whole bunch of money in Voyager. In theory, he would owe taxes on it, but he can't get the money out, but now he's got a tax bill because he just got a 1099 or whatever the equivalent is for paying taxes on that income. So really bad idea, bad look to block this deal for a token that was around for years while Voyager was an operating company. I don't know if they raised money on the token. We never created our own token. So, we did partner with the Crypto Banking Alliance to use CPerks, and we do have big plans for CPerks this year. But it's a rewards token, not a security of any kind. We don't sell it. We don't, we didn't raise money by selling CPerks. It's just a rewards token. Anyway, I don't get it. This 33 Act is it's, what is it, 90-year-old legislation, and they're trying to basically map this 90-year-old legislation to 2022 finance using cryptocurrencies. But the point is, they could have done this 2 to 3 years ago when Voyager was an ongoing, theoretically viable entity. Not wait until they were bankrupt. Customers got screwed, and now they get screwed again because they can't get their assets out. So I don't know. I hope they work this out. I hope that the DFS in New York and the FTC and the SEC basically let some kind of deal go forward that helps Voyager clients get their money back. Okay, what else can we say there? So anyway, so it remains a super busy time in crypto land. Lots going on. Lots going on here at Abra. Things are picking up. We're actually pretty busy these days. I'm putting in a lot of hours. I'm traveling a lot. As you can see, I'm not at my home. I'm actually staying with a friend on the road right now, visiting clients. I'm really excited about the pickup in markets and the level of volume we're seeing at Abra. It's pretty exciting. So, with that, I'll say, we're going to have some pretty special updates for you in the coming weeks and months on Money Talk. So thanks for sticking with us. Our audience is growing again. We've got Apple Podcasts, we've got Spotify, we've got Google, we've got YouTube, we've got Twitter live stream, Facebook live stream. If you're on YouTube, especially, click the subscribe, like button. It really helps us a lot in the search results. Many of you come across Money Talks accidentally when you search. You just go crypto, whatever podcast, and you find Money Talks. I hear about it all the time. I meet people on the road who tell me, "Oh yeah, you're the guy who hosts Money Talks." It's pretty cool, and I'm amazed at the random people who tell me that they watch Money Talks, and a lot of it's because of you guys clicking the like button, sharing it online, and even sharing podcasts as well on your Twitter feeds. Every little bit helps, so we really appreciate the support. And yeah, so as I said, a lot of good stuff planned for you. Thanks for your time. Thanks for your loyalty. And we will see you next week on Money Talks.